vamos a coordinar para recuperar la clase pendiente más adelante. Quiero mencionarles que la siguiente semana voy a cargar cómo va a ser el trabajo final, dadas las indicaciones que me han solicitado hoy algunos. Y quería también confirmar si todos recibieron el correo que les envié adicional al announcement que se envió por Blackboard. ¿Sí? Un tema que ya deben haber levantado los otros profesores es que el nueva aula virtual que tenemos en Blackboard Collaborate les envía el correo de anuncios con un subject o desde una cuenta, mejor dicho, do not reply o not reply de Blackboard, que normalmente van hacia sus correos de no deseados o spam. Entonces, lo primero, yo a veces trato de hacer announcements o comunicarles ciertas cosas desde hacia el curso o en general que resultan siendo relevantes para el curso, como desarrollos en temas de valorización, alguna conferencia que puede estar dándose de Damodaran, algún tema que puede, oportunidad incluso de práctica que puede estar, haber llegado a mis manos, pero sí quiero confirmar uno que recibieron o que vieron, el de Blackboard Collaborate, que te ha llegado, y yo también mandé un segundo correo a cada uno de sus emails que está registrado. Hubieron 2 emails que me rebotaron. Permítame un segundo. Hubieron 2 emails que me rebotaron la semana pasada. Un minuto, por favor. Son... Los había separado, pero no los logro identificar en este momento. Bueno, veré de tratar de comunicarme con esa persona. Aquí están, ya los encontré. Era MP Castaneda a alumni. Si es alumno o alumna puede mandarme su correo, porque me rebotó claramente. Y el de Milagros Pérez también parece que me he rebotado. No me deja... Extraño, no me está dejando observar el correo completamente. Por favor, reenvíeme sus correos para tenerlos también registrados como forma de comunicación adicional al Blackboard Announcement, ¿sí? Son nuevamente la alumna Pérez y el alumno o la alumna Castañeda, que no logro identificar en el momento completamente. Sí, y tampoco está en la lista. Sí, María Fe Castañeda. María Fe Castañeda, por favor. Y Milagros Pérez, por favor, envíenme sus correos para tenerlos en mi registro para poder comunicarme efectivamente con ustedes. El segundo tema, que es tema administrativo, y déjenme continuar un momento en español para manejar esto, es la elección de representante estudiantil. Yo en realidad fomento que haya un REA en cada una de las clases que dicto. Me ayuda la comunicación con ustedes si es que hubiese algún tema adicional a los usuales. Como nuestras clases son solo semanales, es menos probable que haya algún tema, y quería consultar si alguno de los presentes quiere ser o quiere participar como REA de este curso. ¿Alguien? ¿Nadie? Ok, tenemos 29 en este momento. Ok, Renato. Muchas gracias, Renato. Perfecto. Coordinamos para anotarte como REA. Déjame apuntarlo un momento, por favor. Déjenme cortar el video, por favor. Normalmente no suelo poner video porque la señal se ralentiza demasiado. Déjenme cortarlo un segundo. Gracias, Renato Hurtado. Y me voy a anotar como reaparecer. Se ayuda honestamente la comunicación con ustedes si escribiese algo adicional, y también el feedback normal. Como comprenderán, en estas circunstancias en que estamos haciendo las clases virtuales, es un poco difícil entender si estoy yendo al paso correcto o si está faltando mucho más. Necesito mucho más feedback de ustedes Y Renato, ahí sí quiero pedir tu colaboración para estar siempre tomando el pulso de qué tan rápido va la clase, qué tan complicada va, qué tan difícil, fácil. Habla demasiado rápido en inglés, me han dicho a veces, eh, por defecto de cómo hablo normalmente, eso se genera a veces. Ese tipo de feedback siempre trato de tomarlo en cuenta para poder corregirlo poco a poco, ¿no? Bueno, volviendo a nuestro tema central, déjenme estar seguros rápidamente de lo que hemos colocado en Blackboard hace un rato. La clase de hoy va a versar sobre lo que it is. Let me switch back to English. So we're going to be touching today very briefly what is revenue forecasting, right? What are the key issues that we need to look for when we are analyzing a particular company, right? What are the main elements that are going to be arising in this particular case? And I just want to upload quick two slides that I put together. Where I'm having trouble finding the Blackboard. Let me just go back and do this. I'm just editing. If you realize, I have uploaded an Excel spreadsheet that we're going to go through today. There are a couple of issues that we're going to work together that are already done on the spreadsheet, and there are other issues that we're going to be doing together to just point it out if there's any relationship that we should be aware of, right? So let me just quickly go over the key issues. There are a couple of slides, right? So there are two main ways we're going to be addressing the fact of revenue forecasting. Let me share this with you very quickly. Okay, so share this with you very quickly. So we're going to be basic touching based on two approaches, right? When we are going to be analyzing revenue forecasting. So the first one, we're going to be touching based on a top-down approach, right? And we're going to jump into the Excel in a minute. But I just wanted to highlight the key issues we're going to be touching base as we go along, right? We are going to be analyzing all the goods and services that are usually present or are produced by a particular company, right? And are offered to its customers, and how that's going to be impacting from a top-down approach, right? Basically, you focus on growth rate, right? When you talk about a top-down approach. And this is the most simple approach, right? And we're going to realize where are the troubles when we go with that. But besides that, and even despite the fact that it's a very simple approach, right? You need to be aware of some issues. And the key issues you need to be thinking about is seasonality, right? That's the main element that we're going to be analyzing, right, when we touch base with the top-down approach. What we're going to do next, right, and we're going to drill into this into the Excel spreadsheet that it's already on Blackboard, right? It's in the bottom-up approach. Yes, you need to focus on the goods and service, but then you need to move into the price and quality, right? The P times Q. You need to be thinking about how these two elements are affecting the revenues that you are generating, right? And how effectively it's going to be changing over time, right? So we're going to be thinking about, okay, what's going to be the forecast that we're going to have for quantities, what's going to be the forecast that we're going to have for prices in general, right? And here is what all those elements that we were talking about in the first class come into play, right? Because prices are basically based on what is the competitive environment. We need to be thinking about those elements of competition, substitution, complementarity, right? That we are so familiar with when we analyze a particular company, right? It is despite the fact that we may be in a growing economy, right? It may be the case that our product is actually being neglected by consumers, right? Or being substituted by another one. And we need to be aware of that effect in general, right? Seasonality plays a role even in the bottom-up approach, as we're going to be analyzing that, right? But mostly for the quantitative side. And we're going to be thinking about what is the potential relationships that could be affecting our forecasting, and this relationship based on variables, right? What other drivers may be affecting our forecasting that we should be considering as a whole. And that's the key issues that we are going to be taking account when we drive into this Excel spreadsheet, right? So let me jump into that very quickly, unless anybody has any question, which I don't believe is the case. So this is a Excel spreadsheet that it's already in Blackboard. Let me increase the. Okay, so the numbers look a little better in the screen right now. Just okay, so that's better. Okay, so what I have done here is I have uploaded information, right, from Volcan Compañía Minera, right? And this is the revenue data that is available for Volcan, right, as a whole in all its financial statements, right? This is quarterly data that we have, right? Up from Q1 2016, right? That's the first trimester, if we want to think about that, the first quarter, right, of 2016 up until the last quarter of 2019, right? That's available. And actually, I'm missing here, and I erased here the total by mistake, right? Let me just put it here, which is actually not a total, right? I have scrapped some information. So where can we get this, right? Obviously, if your company or you are subscribed to such platforms as Capital IQ, or we're talking about Bloomberg, or you're thinking about Reuters, yes, you have access to this information, not necessarily with this detail, right? You have access to the total revenue data. That's something that is available. Economatica also provides you with the total revenue data, right? But even on a top-down approach, right, that it's a very gross number, right? You clearly can calculate, hey, yeah, here is the revenue data, and we can come up with the growth rate that we have. By the way, keep in mind that we are calculating annual growth rate, right? You can also calculate a quarterly, right? But that's going to be severely affected by seasonality as a whole. There. We're copying this here. Okay, that's awesome. So we can realize how revenues are evolving in this particular company in general. So where can we get this data? Where do we get this data as a whole? Well, you need to dive into the information that it's already available in some ways such as Superintendencia de Mercado de Valores, right? So let me just show you very quickly where am I getting this, because it also going to rise or going to give some opportunity to think about what's going on with this company. Just 1 minute, guys. Okay, here it is. Share screen. Okay. For those of you who are not familiar with, right, our friends, why is this so small? Sorry, I'm doing it incorrectly. I'm trying to do a zoom on the presentation. That's not the way to do it. That's very silly on my part. Okay, so you've probably seen it better right now. So for those of you who are not familiar with, right, you can realize that this is the data from the quarterly financial statements of Volcan, right? And this is for the first quarter, January, March 2017. Yes, Kevin, go ahead. Kevin, you have a question? Okay, no worries, Kevin. So let me just quickly show you. And yes, I have like 20 tabs over here. Yeah, that's That's one of my defects. I open too many things at the same time, right? So what you have here for any company, right, who has an opportunity to have issued bonds or have stocks right in the market, right? What you're going to see here at the website of the Superintendencia del Mercado de Valores is that you can quickly tap into the information here for the companies such as Alicor, right? Or we're talking about Banco de Crédito, BBVA, Banco de Comercio, and so on. Any company who have issued bonds or have a stock, you can actually access to that information such as shareholders, what is the board of directors, information of the annual summary, right, at Memoria, important facts that are presented every day, right, on a daily basis, and the financial information, which is the one I'm drilling into, right? And you have information on quarterly data, right, and annual data on a consolidated and individual level, right? I always like to go for the consolidated data and the intermediate level. And here, our friends at the Superintendent know that they can draw a graph, right? They show us that they can draw a graph. It's actually not at all helpful. I don't find it helpful at all. And you have information on the financial statements that are here, right? Which are on a particular way presented by the Superintendencia del Mercado de Valores. Just to show you very quickly, guys, just 1 minute. The issue with that, yes, I have to refresh. I think so, because it was a long time ago. Oh, that's typical of the Superintendencia del Mercado de Valores. Doesn't, when I want it, it doesn't help me. There we go. Awesome. Here's Volcan. Select Volcan. Okay, cool. So that's the financial information, consolidated level. And let me go with the 2019 first quarter, right? And what I wanted to show you is that unfortunately information that is presented here on the financial statement, right? The way they show you the data, which is this way, right? The way they aggregate this is not necessarily that helpful, right? It's very aggregate in general for some items, right? And in the balance sheet, it's not that complicated. The statement of results, right? So first you realize the revenue line is just one line, right? It's just one line that doesn't help you at all, right? Obviously, you need to go to the notes of the financial statement that they try to refer over here, which, by the way, are not present in any part of this analysis, right? And this is just data you can try evidently to download using Excel and figure it out if that works for you, right? But what I suggest, right, instead of doing that, is going to the notes, right? That's what we did a minute ago, right? And as I was saying, these are the notes for the consolidated financial statements, right? For Volcan, it calls intermediate because it's only for the quarters, right? And this is for the first quarter, 2017, and compare it to the 2016 first quarter. For this company, right? And you will see something very similar to the elements that we have been analyzing. In this particular case, a key element, obviously, is to figure out in which unit and currency everything is presented. So Volcan being a company that exports more of its goods right outside Peru, and basically the revenues are in dollars, right? And most of its expenses are in dollars because they import a significant amount of capex, right? What you're going to see is that they have decided to use currency the dollar, right? And that's very helpful because their shareholders are mostly outside Peru right now. As part of that, Anglo-American, obviously, right? You know that there was an acquisition of Volcan 2 years ago regarding this. So what the key element, obviously, we're trying to figure it out is the revenues, which again, in the financial statement, in the income statement, has not enough detail, right? So what we would like to do, obviously, is go to note 12, right? And that's where the main elements are available. And you are going to realize when you are doing financial analysis, right? Either on the side of the sell side, right, where you are trying to figure it out, okay, and I'm going to be working in Sociedad Agente de Bolsa, right, or trying to do some research on a company, right? These notes are going to be the bread and butter, right, as it's called, as it's usually called, the daily work that you're going to be analyzing, right? Because of all the important information it's presented or should be presented in the notes, right? That's where everything is buried, right? Accountants believe we are not going to read that and we're going to analyze enough that, but they should disclose any particular information here, right? As part of any analysis we're having. So first of all, here are the sales, right, or the revenue that we're getting, and they are giving us some information about it, right? So we want to have the detail on the company goods that are being produced and sold in this particular case, right? So this is applicable to any company, right? If we are talking about, for example, Pomalca, right, or Cartavio, right, which is a sugar company, right? A sugar producer in Peru, right? So you're going to see that they have sugar, right? But they actually have white sugar, which is different than brown sugar, right? There's a chemical process to transform brown sugar to white sugar, right? By the way, sugar is brown, right? It goes through a chemical process to transform it to white sugar. And so you're going to have two products, which is white and brown, but you also have some other products, right? Which is alcohol, which can be a byproduct of the sugar production, right? You can also something called bagazo, right? Which is usually used to elaborate it's a cardboard, right? Carton, right? So that's usually the way they actually have any other byproducts that they can sell, right? And similarly, if you're analyzing a particular company that is in a retail business, right, you're going to have in their sales uh, every type of product that they're going to be selling, right? And usually um, they are in groups, right? They are aggregated such as electronics, furniture. You're going to have also clothes, right, and so on, right? And in this particular case, I wanted to drill into Vulcan, right, because this company has been particularly in the news given its acquisition a couple of years ago and the important production that is gonna have, right? Given the rebound in prices, in commodity prices for copper and zinc that we are having observing in the market, right? So quick thing that we have over here, right? It's usually the case when we are talking about a mining company that is not a single product, right? There's not a single commodity that they're producing. It's usually polymetallic, right, with several minerals. But there are some of them who are the key ones, right? In this particular case are zinc, lead, copper, and silver, right? Bulk is a chunk of minerals as a whole, right? And I have not put that into the Excel spreadsheet given its size and given the fact that we can right, neglect that, right? And they have also another type of product that is called silver bars, right? So silver bars refers from silver, right, which is usually ore that is produced, right? That silver bars are presented as bars, obviously, right? Is usually 1,000 ounces of silver, right? And it has a 0.999 purity, right? Which a silver bar is going to give the acquirer significant confidence that the product has been tested and it's a very good way to preserve wealth, right? But several acquirers or several consumers that are interested in this type of items, right? Obviously, the other items, zinc, copper, silver that we are talking about are products that are being used by other industries, right? Everybody knows that copper is usually used in telecom, right? Zinc can be applied also to manufacturing process where you go to industrial ones to elaborate bars and tubes, right, that are going to be using particular items for water, right, or cooling processes. Lead can be used to protect other type of equipment, right? And there are several uses, obviously, for this type of issue. Logically, you're also aware that China is one of the main producers and buyers, right, of this type of minerals, right? So that's one of the things that give us the confidence that in year 2021 things are going to rebound very quickly because we are observing recovery of the Chinese economy, as we should expect. But there's one issue that I wanted to highlight, right? That you may not be aware. Some of you have been analyzing mining. It's this issue about final liquidations, right? That's adjustment that occurs that is registered as part of the revenue, right? And it's something that it's very common on mining companies, right? Anybody has heard about this? Anybody has analyzed a mining company before? Currently not. Anybody has drilled a mining company? Okay, Renzo, have you seen this adjustment for liquidations? You can also talk, unless your microphone's right.
Yeah, sometimes I saw that with the main analyst or the senior analyst.
Okay. And do you remember what this adjustment was, or can you share with us?
I think that also is in other sectors. I think that I also can see that probably in the consumer or in the consumer industry also when we analyze some companies there.
Okay.
But in this case, in the mining sector, I think I don't know if it's something related with the losses that you can have when you are producing or treating the minerals.
Okay, that's a very good point. Yes, there can be some losses when you produce a mineral, right? And actually, it can be some losses when you produce some products, right? And that's going to be an adjustment that is usually incorporated into the inventory, right? Accounts receivable or other item, right? In general. In this particular case, it's a little bit different, right? Because when you are a mining company, right? And you agree with a customer that you're going to sell some minerals, right? You sign a contract, right? But this contract, realize that it's like a future contract, right? It's an implicit derivative. What do I mean by that? Because you're agreeing today that you are going to deliver the product, right? But it's not that the customer comes to your mining facility and picks up all the silver, copper, and so on and goes with that, right? No, obviously, the way it works is we agree that I'm going to deliver the copper to your facility, right? Or to the port, to the near port here in Peru, right? In 1 month, in 3 months, in some period of time, right? Usually it's between 1 month and 3 months, right? And it depends on the production and the stock that we have, right? So we are agreeing today, right, that I'm going to deliver an item in 1 month or 3 months time, right? And setting a price. That's a derivative, right? That's a future contract that I'm getting with my buyer, right? Obviously, from accounting perspective and from financial perspective, this is not treated as the usual derivative, right? It's an implicit future contract that we have. And what they usually occur, and it's actually explained here in the notes that you can quickly download. I'm actually going to upload the notes. Some of the notes, I'm not going to upload all the notes that I have taken, which are like 5, 8 of them. What it actually says is that in the commercial contract, that's an adjustment, right, that needs to be considered for the total price to be paid, right? So you agree on a price today, which is a provisional price, right? And then you agree to make an adjustment to that price based on the contract that we have, right? Because what you usually see in the market, right, when you are going to be analyzing these minerals that we're talking about, copper, gold, silver, right? You see the future price, the 3 month future price usually. If you want the current price or today's price, you need to ask for the spot price, which is not normal, right? That's not the usual price people look into. People normally are thinking about the future price of 3 months because that's the time that the contracts, right, are going to be executed and you're going to have to deliver the items, right? So remember a few months ago, right, when we have this weird thing where the oil price went negative, right? The oil price, if you didn't read the news or didn't hear about it, right, it actually go below zero, right? Actually was zero for a while, right, or close to zero, and in some period of time it went negative, right? So for those of you in economics, that's called a given good, right? Where holding the item, right, it actually costs you money. You don't, you're not, your utility decreases if you have the item, right? So what we are going to be thinking about is what it occurred is that the contracts that were being signed at that time, right, telling that they're going to be delivering the oil in 3 months, we're we're not capable of finding the storage unit to put those barrels of oil, right? So since it was very costly to hold those barrels of oil, right, what basically occurred is that the price went to negative because considering the cost of storage that was so high, it went far above the price of the commodity, the price of the oil, right? Is the oil has to be properly stored, right? Or things like the unfortunate tragedy that occurred in Lebanon, right? Happen, right? If you don't correctly store volatile items, right, some major catastrophe may occur, right? Environmentally, also, if we are talking about oil in particular, right? So coming back here, right, what we were saying in the case of these items such as minerals, right, is that they have an adjustment in general. And if we want to drill a little bit more on that, right, we can actually realize that there's an implicit derivative, right, as it's saying, and they need to think about what are the reasonable value of that it is impacting in this particular case negatively in 2016, right? Saying that, hey, the price that we agree, right, initially in my contracts, right, had to be reduced given the final liquidation values. But in 2017, the price that I agree will actually give me a positive value, right? But none of that is being considered, right, in the Excel that I have put together. We have just thinking about the items that we have over here, right? Because I'm assuming that the liquidations are zero, and it's actually very, very difficult to forecast what's going to be the liquidation value in general, right? So let me jump back to the Excel. As you can see, I have actually checked several of these and I'll note a few of the others. I'm gonna put that also on Blackboard. Give me 1 second to, where is this? Here it is. Switch. Oh, sorry, there was a time here. Just sorry, Nicolas, I didn't read your chat on time, right? Just you also mentioned that it could be also the fact that you are selling some items to a subsidiary. Not that this adjustment, but it's also possible what you are mentioning. A lot of things are usually sold to subsidiaries, right? Or these major traders, right? Major traders of minerals, right? That you can't see in general, right? Trafigura is one of them that is usually present here, right? As a major trader of commodities, right? Of minerals here in Peru. Just jump to the Excel, back to the Excel, right? So once again, right? I'm just focusing on saying on these 5 items, right? That are the key revenue elements, right? In Volcan, right? As a whole. And this is a typical structure, and I have actually immobilized this a little bit further. This is a typical structure you're gonna see, right, when you elaborate uh, an analysis of a revenue for a company, right? Um, so quickly, we jump to the top-down tab, please. Right, I'm gonna upload this. There are a couple of things that I have done here, right, and you can realize that. Let me mobilize the panels for a minute to show you, right? I have done, and once again, I'm here. I'm using a template, right, that I like to use, and it's very common use, right, to calculate or present information for quarterly and annual data, right? Last time we used another one, right, that had the information with array formulas, right, that quickly help us analyze and calculate the revenues, costs, and so on for a particular company. We're gonna be switching between one another, right? There's another template that I also have on hand, right? But I want you to present, right, for you these different templates, right? And you choose which one is the best that you are more comfortable working with, right? And actually, you can improve them because probably you can become a lot more technological savvy than I am, given all the development that usually occur, right, on a daily basis, right? Um, it's obviously that the people who are younger can adapt more quickly to technology. My kids are amazing preparing videos and so on. It's something that actually goes beyond my case, right? So what I wanted to show you here, right, is that this is a very good practice, right? It's a good practice that is usually presented, right? That is, the first one is reserve some columns to the left and reserve some rows on the top, right? For elements that can later be used, right? For summing information, right? Or finding information critical to your analysis, right? And even a top-down approach, right? I like to have these elements that are going to be helping me, right? So imagine, for example, that you have revenues, then you have a cost, right? And you have some other items, right? And you need to add them, and you are capable of pinpointing them to sync, right? If you want to have the gross profit, right? La utilidad bruta, if you want to have that, you just have to add by sync, right? You don't have to be linking the cells, right? And trying to figure something out and calculate that correct. In this particular case, that's for the ones that are in the vertical side, right? For the rows that we have, right? What we actually try to do that is quite helpful, right? Is to pinpoint that not only for quarterly data, also for monthly data, right? To add them up very quickly. You can realize here that I have used a sum if, right, function to very easily calculate, right, what's gonna be the revenues for each one of the years, right? Besides considering for each one of the different products, right? Each one of the different commodities, right? So play with that. It's a very good way to calculate the total number, right, that you're going to be needed. And you can add this if you have monthly data for quarterly purpose, right, and go on. You can go with annual data, right? And you can actually say, okay, if this is the revenues, right? Remember, revenues is usually presented as a flux. This is the quarterly data from one for 3 months period, right? What you are going to be observing is when you go to the balance sheet, right, what you want is the end of each year, right, not the sum as a whole. You can also pinpoint that very easily here, right? So let me quickly go here, right, and we said, okay, if we are analyzing this from that perspective, right, let me hard code here for a minute or immobilize for a second the view, right? We are gonna be analyzing, okay, the growth rate that we have been observing, right, has been growing significantly in 2017, but in the last 2 quarters of 2018 and in 2019, we have a significant decrease as a whole, right? Even if we focus from a perspective of annual data, right, obviously we're going to be seeing uh, that there was a decrease in revenues in this particular case. And what basically a top-down approach tells you is, okay, we can try, right, to estimate correctly the revenues of the company, right? Thinking about how the growth rate is going to behave in the coming periods, right? So we are saying, okay, I'm going to try to estimate the 2020 data, right? We're going to try to go for that, and the 2021 data, right? I'm going to go for 2 years period right now. That's for the sake of explanation, right? And you're obviously going to try to focus on the total, right? And think about, okay, what's going to be the growth rate that we have, right? What's going to be the growth that we expect? And normally, right, if we are talking about an industry that is stable, right, that you believe is not going to be significantly affected by changes in the economy, has been growing at a particular rate in the economy, right, you can actually use historical data right here. The average is close to 1%, right? To imagine, okay, this is probably going to grow 1% in general, right? Excuse me. And and logically calculate and say, yes, this is going to be 1%, right? And yes, you assume that, and you imagine this can be estimated this way, right? And what happened with the other items, right? How I'm going to present the information from each one of the different sources of revenue or goods that you have. Well, usually what you're going to be doing, right, is you're going to be assuming which percentage you have, right, of each one of these goods, right, in this period, right? So we are saying, hey, what you're going to be trying to calculate is, in general, on average, right, what's going to be the values that we're going to be having. Sorry, I messed it up over there. Just quickly reroute this. Okay, that's awesome. What's going to be the percentage that we have, right? And clearly, and this is also a good way to start our analysis, right? We realize that most of our revenue is coming from zinc, as it's obviously appeared that is 433 million dollars, right, in 2019 versus the 754 total that we have estimated, right? So you may want to try to consider, okay, this structure that we have in 2019 or the average, right, uh, for this analysis. In this particular case, I will prefer to use the last element, the 2019 number. Why? Because I observed that it has been fluctuating over time, and we can assume, right, that it will remain similar in this period, right? And this is actually an assumption, once again, right, that we are analyzing here. Just code this and yeah. Okay. So no, I'm making a mistake. I'm making a mistake. This is the link. The number was too low. That was eventually that was happening. And I'm also made a mistake over here, and this should be Sira. Yes. And we check that it adds to the same, right? By the way, that's something that you may want to have embedded in some of your estimations, guys and girls, right? It's usually good to have in when you are doing this type of stuff, right? Some kind of check and balance, right? In general, that is going to be presented, right? It should be zero, right? And you can actually go and think about putting this with conditional formatting, right? And saying, hey, if this is zero, right? Go ahead and put an OK number, right? You can actually go with that, and it's actually very easy. Equals zero, comma, OK, comma. You can actually go with that, and let's see. There's a rounding thing over here. That's usually 14. Yes. There's a rounding here. Sometimes in Excel, it actually you see that it shows zero, right? And you can go ahead and do, as I was saying, conditional formatting, right? And put a rule if it's appearing green or red, right? To just draw your eye if there's an error in your model, right? But once again, this is one way to do it, right? And I have used 1% and 1% over here, right? And usually you want to do this, you want to highlight that you are making an assumption, right? Obviously, when we are going to build this whole model more completely, right, what I would like to have is a tab that is called assumptions, right? And this item is going to be linked to that tab, right? Right now here that we are only evaluating the revenues, it's a number that we are just putting there, right? But is this reasonable, right? So first of all, let's do a sense check, right? What I have done here, just for the sake of simplicity, is, okay, I have calculated the average, right? The average tells me that it's 0.9, right? Let's put 0.9 to make it more dramatic, right? 0.9 growth rate, right? But that's not necessarily the case, right? Given the current level of uncertainty that we have and the changes that are occurring. So it does appear very small in my screen. Does it appear correct for you guys, the Excel, by the way, in your screen? Probably my laptop. Well, it's 17 inches, so. Okay, so it's okay for everybody. Thanks, guys. Sorry, these are the kind of issues that you don't have when you have a blackboard, right? Um, so coming back here, right? So we're saying it's 0.9, right? That's a gross assumption that we're making, right? And I'm just assuming that it's going to be distributed the same way. But all you can do, you have to do a sense check of that number, right? And once again, we need to reference to what has been occurring, right, in our economy, right? So you can go and say, hey, yes, where can I get some information on my economy, right? And think about um, what has been happening. Second, here, let me switch screen, right? Minute. Sorry, I need to check the chats because otherwise. Let me switch and then screen and is sorry, was not in the top. Sorry, that's why it's not showing. A minute. Cancel. Okay, this one is right. Yes, this. So this is. Let me just go up. So the first source, sorry, the first source that you should be looking at, right, when you are analyzing what's going to be the evolution of the economy in the following years, right, is obviously as a reliable source such as the Ministry of Economy and Finance and the Banco Central de Reserva, right? And these, by who do not know, it is the Marco Macroeconómico Multianual 2020-2023, recently presented by our Minister of Economy and Finanzas, Exalumna Lupe. And what we have over here is an estimation what they believe is going to be the economy in the coming years, right? They actually update this every semester, right? And they present the annual information mostly by the month of August, right? Just before the budget has to be approved by Congress. So what we're going to be having here, and I'm just scrolling down very quickly to just come up with the table that has, let me see, yes. Sorry, I think I jump it, I miss it for a minute. Let me 1 minute. One of the things that they have done is they put a lot more color than before, right? This thing was, you remember I missed the page number and I think I'm getting, this is taking too much. Well, it has a forecast for the GDP for the coming years, right? This is from the income side. The one is from the expense side. The one is how much it's gonna be. Sorry, give me 1 second, guys. I'm just annoyed that I missed the page unnecessarily, right? Maybe go to cuadro estadístico de frente, but it should be here in local perspective, right? I'm just jumping to the statistic tables. That's easier. Okay, so here it is, right? So here's the forecast that they have, right? Uh, for our GDP in the coming years, right? This is the real presentation that they have used. This is based on 2017, right? Let me just quickly shift back a minute, guys. Should be correct. The one that I looked, it was a little bit different, right? So let me just focus here on mining, right? They are thinking about a 2.6, right? 3.8 growth rate, and that's the, oh, that's why I'm making a mistake. Sorry. I'm looking at the one from 20. I saw I was looking up the updated one, and I was like, why the hell are they thinking about 3.3? I've opened the wrong one. That's very silly on my part. Sorry, 1 minute, guys. I have it on file, but I can't find it. Let me just give it 1 second. It was so silly that they assume that number, right? It's not. Here it is. That's the one that I'm looking for. 2021, 2023 macroeconomic multi-annual, new one. Yeah, that's more likely, right? I was surprised that it was clear, not the correct number. This is most likely, right? That we're going to be observing, right, a decrease, right, of 12%. That's a number that everybody's talking about, right, and 10%. And then we should be looking at this number, right? So we are in the metal mining environment, right? So we should be thinking a 10.9 decrease on our top-down approach, right, and a 15.1 increase in 2021, a rebound that we should be expecting, right? Sorry, probably give me 1 second, guys. Just want to make sure that everybody's no, it's not being shown. Sorry. Please give me a hand on that. It's because I have too many screens. That's what is. Okay, let me organize myself a little bit. Share screen. Okay, so this is the 21-24 that I have been seeing. Okay, and these are the numbers that you should be seeing right now. And these numbers are showing, as I was saying, a decrease of 10.9 in 2020, right? An increase of 15.1 in 2021. That's the more reasonable numbers. And I was saying this document is prepared and presented, right, to Congress as part of the budget approval that is usually performed by Congress, right? In addition to that, we have access to some other think tanks, right, or sources of forecasts, right, that we can use, right, to try to estimate this. And I already uploaded this one on Blackboard last class, right? This is a presentation that we discussed from MacroConsult about what we should expect in our economy, right? And let me just show that a little bigger. And as we have been saying, there's going to be an increase in 2021, right? In this case, 14.1, that's what they were estimate, but the decrease was supposed to be 9.8, right? So I'm going to go with the macroeconomic multi-annual, right, that we just discussed, and assume that there's going to be a decrease of 10.9 but a recovery of 15.1, right? So from a top-down approach, let's move it quickly back into the Excel spreadsheet, right? That's very easy. From a top-down approach, this should be the minus 10 point, okay, minus 10.9 And here should be the recovery number, right, that we discussed a few minutes ago, which is 15.1. And we should have that. So if the problem obviously with the top-down approach, right, is that you are assuming, right, that this company is going to evolve similar as the whole market, right? We are just thinking about that the company is going to have similar decrease in this particular, in the revenues, right, and a recovery as it should be expected. Logically, if we are working with the company, right, either because we are inside the company, finance, industry finance, working in the corporate finance or the finance department of the company, or either is we are investment bankers of the company, right, or doing consultancy service for the company, we can have a better estimate, right, gross estimate of what they expect to occur in general. And obviously, it will depend on how they differentiate for the total sector, right, as a whole, that we're going to be analyzing. But this is a gross way to work it out, right? We're just assuming a number or thinking that a number is going to be the correct way, right? But that's not necessarily accurate, right? And we are going to be thinking about as a whole, right? By the way, we can also forecast it on a quarterly perspective, right? But we should be aware of seasonality, as we have been saying, right? Based on the information that we have. But let's move on to the other approach, right? Which is the most critical one. We need to be thinking about, okay, what has been happening, right, with our with with our particular company, right? And I like to use this tab called analysis, right, to come up with some elements that are helpful, right, to figure out what has been occurring with the company and what can we forecast, right, or assume reasonably in the near future, right? Uh, obviously, in this particular context that we are right now, right, we know that there's going to be a decrease in revenues in the coming, or at least a decrease in production, right, in some industries, right, and not necessarily in mining industry, right. It has been disturbed, it has been affected by the quarantine, that's for certain, right, but obviously we are trying to continue foster all the exports, right, so they continue producing, right, and selling their minerals abroad, right, and so that's something that we need to think about. But besides that, so let's forget for a minute the context, right? Usually what you would like to do is obviously you would like to have a quick understanding, right, of what is the evolution, right, of revenue for a particular company, right? And although the numbers can give you that sense, right, it is usually helpful to have some graph that allows you to analyze visually what is happening. Oh, come on. Sorry, 1 minute, guys. Is this thing just started frozen on me and saying doesn't respond? Let me just save it. Sorry, I don't want to just end up losing everything, right? And this is going to be a typical graph that we are going to be seeing, right? But let me just do something very quickly. First of all, let me move this outside first, and then I'm going to try to pinpoint this, right? This is usual. This is the revenues from Zinc, right? Let me just quickly go over here and put here revenues, right? But we would normally like to do just to have a better analysis, right? Is obviously at the growth line, right? You may want to come up with a minute. Let's quickly cover this. Obviously, it's not helping here, and you obviously need to think about, okay, we're going to need to use the secondary axis, right, for the growth rate. And logically, you want to label it and do any other stuff, right? That's typical things that you want to have here, right, for the information that we're going to be having, right, with all the data that is going to be helping here. Let me just increase this a little bit to make it more clear for everybody, right? But we want to do this for all the type of goods and services, right? To come up with some sense of understanding what has been happening. And it's clear, right, from this graph, right, that, yeah, this revenue from zinc had a massive jump, right, in 2017, right, that we should be aware of. But now the numbers, right, growth rate is very modest, right? It's between, right now, actually, in the past 5 quarters, has five five quarters that it decreased, right? But the number should be between 0 and 10 to top, right? You should be thinking about, okay, that you should expect a significant increase in revenues from zinc in general. And we should try to do this for each one of the different items we're going to have, right? And that's going to give us a sense or better understanding, right, that what's going to be occurring in each one of our particular elements, right, in each one of our particular goods that we are serving. In this case, commodities that we are analyzing, right? If we go with this, right, obviously what you're going to be thinking about, okay, remember, was the major good that we were selling, right? Representing more than 50% of the revenues, right? So zinc and lead are the ones that we should try at least knew exactly how much are they going to be. So snail, we're going to be thinking about to correctly estimate zinc and lead, right, in the coming quarters, in the coming year, right? That's the main thing that we are going to be analyzing as a whole. Other thing that the graphs allow us to keep in mind is the seasonality we have been talking about, right? The seasonality, and let me just switch this axis because it's on a quarterly, it's on a monthly basis, right? And that is in quarters. It's better to have that presented that way, right? Is that we can realize, right, that every March there's a slight increase, right? Uh, and in March and June are the months where you observe an increase in revenues, right? In general, in this particular commodity, right? In zinc. So that's the seasonality that we are trying to analyze over here, right? When we have this data. The other way logically to come up with that, right, is, and if you have other platforms, right, when you try to analyze this with average means and so on, is to try to estimate this, right, with an index for the average of each one of the different um, quarters in the year, right? So what do I mean by that, right? What I mean is the following. Let me just copy this back down here, right? Because I like to have this drop down over here. 1 second. 1 minute, guys. Sorry, I've had some technical issues here with. So once again, as I was saying, these elements up here, right, allow us not only to come up with total, right? You can also think about the average, right? We can also do a sum if for the average to calculate this, which is an average if, right, in this particular setting. So why am I doing this? Because it's going to help me calculate very quickly um, the seasonality that we have, right? To consider what's going to be. Oh, sorry, this is my Spanish version of Excel. Considering the average revenue that we have, right? You can also go with total. Well, we can actually use a total. It's going to be the same. It's going to be the same eventually. So this is what I'm trying to build, right? we're going to be thinking about how much importance actually we're going to create a formula for that, but let's not drill on that. Has right over the total. Actually, let me switch that back, guys. It's not just the average. It's just the total. That's better to use the total. How much do we have in each one of them? And then you realize, okay, this is quarter 2 and 3 are the most important that we're going to be having over here, right? And here we move to. So once again, it's also quarters 2 and 3, right? But it's mostly a similar 1 and 4, right? As you can realize in this analysis, right? It's actually quite simple in reality. I'm just doing this way, but you can actually pinpoint a formula to simplify it. Okay. So once again, we are thinking about a seasonality purpose, right? To analyze this. Oh, shoot. I made a type over there, right? It should be that one. Okay, let me just. Okay, I'm not gonna. Sorry, it actually backfired on me, but actually we can quickly correct that, right? We quickly replace here and we say $29 with 30, right? And we replace all the separate, right? And then we copy it down and it works. Right? So it actually helps us think about it, right? In the sense of how much is the seasonality that we have in the different type of items, right? Obviously, we're not going to focus on all the items, right? Because there are some of them who are not adding that much value. Copper is not adding that much value in general in your revenue side, right? You may actually neglect that, or if the information has a significant seasonality, taking that into account. I want to focus on these two, right? These are the key elements that we want to think about. Think and let. Those are the ones that we need to analyze and think about. Okay, the seasonality is different in each one of these ones, right? If we analyze them, we're going to realize that Q2 and Q4 is important for zinc, right? While in particular, what you have been observing, if we go through the numbers, right, is that Q4 has been more important, right, in the past year for lead, right? And obviously that seasonality can change, right? So that's why I like to focus on the last year to think about what's the most reasonable seasonality. If you analyze the lead one, right, and let's go through the numbers very quickly, right? 2016, it appears that, okay, Q1 and Q4 are important. Then 2017, right, if we go through the numbers, 2017 is Q2 and Q3. And if we go in 2018, it's once again Q2 and Q3. But in 2019, right, it switched to Q2 and Q4, right? So it's not that stable, right, in terms of seasonality. And in that sense, you better go with the last element as your forecast for the coming year, right? So we're going to focus on these numbers. Let me just highlight them very quickly as the ones that are going to be helping us assume the forecasting, right? Fortunately for zinc, it's more reasonable, right? It's usually Q1 and Q2, right? The ones that we are going to be considering as a whole for seasonality purposes, right? Okay, so that helps us on the seasonality side, right? Let's talk quickly about the bottom-up approach, right? And what I mean the bottom-up approach is instead of thinking about a growth rate, right? As we did in the top-down and we said, okay, this is how we're going to grow, right? We're going to drill into each one of these goods, these commodities, right? Similarly, if once again, if you have other type of goods and services, right? You need to drill into each one of them. This is obviously very helpful if you're working with the company, right, or advising the company, because you can have a lot more inside information about the quantity produced, right? And coming up with, okay, what they expect about prices. Oh, sorry, this slightly need to increase the uh, you're going to have a lot more information about the prices they expect to have in their contracts, right, in the coming year. That's something that we can help to have. It's going to be helpful. But if you don't have that access, right, obviously we can access some market data, right? And I particularly choose Vulcan because the minerals they produce have prices in the market, right? So once again, the information that is available on the Excel spreadsheet has all the price information for copper, lead, and silver, right? As a whole. You're going to observe that there's a closing price, opening price, maximum, minimum. In some cases, there's information on volume, right, and the variation that you're going to be observing, right, on the prices, right? This information obviously should be obtained from reliable sources, right? You can have information on prices of commodities on Bloomberg, on Reuters, right, very easily. If you do not have access to those platforms, right, which may be the case depending on the company that you're working, or depending on how much access would you have when you're working remotely, right, which has been one of the troubles right now with working with Bloomberg. It's the possibility to you are capable of obtaining that information right from other sources. Let me show you one that I have two over here actually that I was looking into to get the data right that we are talking about. It acts frozen. Let me just quickly shift over here. Hope we don't crash. That's the only thing I don't want to occur. Okay, here is. This is investing.com, right? It's a very. Is it showing? Let me just quickly. Yes, yes, yes. Uh, sorry. Let me stay over here. I wanted to get out. This has the future of silver, right? And it's given me the December 2020 because, as I mentioned, right, the information that is presented for minerals is 3 months in advance. So right now they are trading for 3 months time delivery of silver, right? By the way, it's not necessary. If you are the mining company, obviously you should deliver the item, right? But if you're an investor, right, you can buy this as futures, right, or you can sell this future, and obviously you're not expected to deliver the items in physically, right? You're not expecting to produce all the stock that is being going to be considered in this particular case silver, right? You can basically pay the difference between the price you agree on the future, right, and the current price that is available for that particular um, commodity, right, that we are seeing. And it has some data that it can be used, right? This is investing.com, which is a particular way to get the data. And the other one that I usually touch base with, right, this is called, unfortunately, there's some advertisement. It's called macro trends, right? So macro trends actually has information on other type of items, right, such as interest rates, right, financial economic information, GDP growth, and so on, right? And financing for a particular company, where how much leverage governments have, and so on, right? And it has information on the silver, right? In this particular case, plotting that, and you can actually download the data, right? To help you calculate correctly how much it's going to be. So this is the reason that I was mentioning, right? That hey, despite the fact that we are observing a dramatic decrease in economic growth in several sectors here in Peru, right, and in Latin America or globally, right, the mining sector has had a significant revamp, right? Because prices have increased, right? dramatically. And this is the silver price, right, from 2016, which was up until 22 dollars, right, and that's $22 per ounce, if I recall correctly, right, that's $22 per ounce, right, and we're going to be having, right, actually drop up until 14, but after that, after the pandemic, this is April 2020, right, and March 2020, in April it started increasing significantly, right, and it actually is right now 2026.71. And why do we care about prices, right? What is important about prices? Well, if we are it's basically supply and demand effect, right? What is happening with the mining facilities is that there are a lot more mining operations that are becoming profitable, right, with these prices. Obviously, mining operations have some difference from the typical manufacturing facility, right, in the sense that some operations are more costly than others, right? There's no one single cost that you should imagine for a particular mine. Each one of them has a significant cost based on how difficult it is to extract the mineral, right, that we are going to be considering. So the higher the price, right, the higher the number of production units that are going to be available and are going to be start producing, given that the price is so high that currently it covers all the costs and generates enough profit, right, to consider the required return for the company or the shareholders as a whole, right? So coming back to our Excel, right, what we have done over here, oh, sorry, it's frozen, crash. Okay, we're back. It didn't crash completely. Sorry, I'm getting annoyed with this crashing more times than I want to, right? So coming back with our bottom-up approach, right, that we are have been talking about, right? What you are gonna realize is, I'm just reducing that for presentation purposes, right? Is that we have the price over here, right? And obviously I have made an assumption to calculate the quality, right? The trouble in these particular companies, right, such as Volcan and other mining facilities, is to come up with how much quality they use or they produce, better said, in these particular quarters, right, that we have been analyzed. And the problem, obviously, for me has been trying to estimate that. I'm using a trick here, dividing revenue with price, given the unit of production that we are using, right? There's ton, there's pound, there's ounce, there's bars, right? And given that, we can make an assumption about it, right? And think about, okay, how can we assume that this is going to be evolving over time? What if we want to do the bottom up approach, what we need to do right now, right? And I'm gonna go on the quarter side, right, for a minute. We go on the quarter side. What we need to do right now is to come up with how much do we expect prices to behave, right? How much do we think that prices are going to evolve over time, right, in the coming year, right? I'm gonna do 2020 very quickly. Actually, we actually have that information. Let me just go a little farther. 4 months to come up with that. Okay, so what we are going to be trying to come up with that information is use either consultancy service, right, that do provide the data from prices, right, or go to reliable sources about what's going to be the price in the coming years, right? So there are several reports about prices, right, for commodities in the future, right? You basically need to have access to some of these prices in general, right? To think about how can we estimate or how can we assume some of these elements, right, in the coming months. So let me just quickly jump into 1 minute, guys. Where is my here it is. minute. Let me just show you exactly what I want. So once again, there are reports about what we can estimate the prices, right? That's a very good way to try to arrive to the number. I'm going to do this. The other possibility, as we were just touching base on that, right, is to analyze, yes, there we go, analyze the futures, right, that we have been seeing. So once again, we were talking about, okay, this is the the silver futures, right, that we were analyzing here, right? But there are some additional data. Let me just quickly jump into that. So it's giving me some analysis on data, right? That we should be capable of thinking about what's going to be the future in the coming 6 months, 9 months, and 12 months, right? So apparently my subscription is not helping me do that. I think I'm outside that analysis. So there's some different analysis and opinion. Let me just quickly go over that. And this is in Spanish, but it's also in English if you want to look at that. Okay, so here's what I was looking for, right? That's what I was looking for. Increase that. So similar to this analysis, right? I like to use investor.com because it has some information from analysts, right? But once again, if you have Bloomberg, Reuters, right, and we can actually have some access on Bloomberg, but I couldn't upload to the lab, right, through the new way they have updated. So I have to resort to this uh, as my backup that I usually look into, right? It has some estimates from analysts, right? What they imagine is going to be the price, right? And this is in the case, once again, for silver, right? This is the ounce of silver. And what they have is what has been assumed as the average for 2020 and 2021 in terms of prices, right? And the good thing that this particular website provided, is the one that I like it, is that it gives you a detailed analysis from the different sources, right? Jeffries, Macquarie, right? The big guys over here, Citigroup, Bank of America, right? Uh, to come up with what's the price, right? We can go with the median, right, which by the way it's not affected, as you know, by the outliers that we may have, right, to calculate what's going to be the most important number that we are going to be thinking about, right? Or we can use some information here it has from the third trimester, fourth trimester, right? It's in Spanish, tercer trimestre, cuarto trimestre, that we're going to be considering this particular item, right? So we're going to be using something very similar to this, right, to come up with the estimation in our particular forecast, right? So let me quickly jump into that over here, right, for the prices, right? What we're going to be using for silver, right? I'm going to be considering here some, this is that I have, 7.4. And what I'm going to be thinking about using the median, right? Let me just quickly shift onto, I don't think I didn't shift. No. So let me shift to the Excel very quickly, once again. Right? So you just use information that once again, I was hoping to have it available, right? This is, I'm going to assume just for the sake of simplicity right now, I'm going to assume it constant over here, right? Over this, I'm very quick to change that. Nice. This is going to be very easy. This is 2019, 2020. Okay, where's it? right? So based on that, we are capable of coming out with the different prices, right? And we're going to be doing the same, right, as we just did for silver, right, to try to come out with the correct estimation that we're going to be needing, right, for zinc, lead, and copper, right? So let me just quickly um, put that information available, right, as part of our analysis. Let's quickly go over here. I'm gonna eliminate the decimals very quickly. So I'm just gonna go with what I have here as information from. Let me just quickly go over here. I'm just uploading quickly data. Give it a minute. I'm just gonna keep the same price, right? So we will be doing that, and that's very easy to do that. And then that's not gonna load the numbers, but once again, I'm getting this, and sometimes it's useful to put the source, right, or have it as a note. You are not going to be presenting this if you're going to have it this as part of your estimation. Where are you getting the data, right? If that's going to be helping you calculate this that we are talking about. So let me just quickly jump into here, finalize this very quickly, put here a couple of numbers we're going to be just using for the estimation. Logically, what you're going to need, okay, so the prices are very easy as we were just discussing here, and that's not going to be so difficult to figure it out, right? You should be capable of coming out with the prices for each one of these items, or have an estimation of those if we are thinking about the company side, right, or the company perspective as a whole. Let me just quickly finalize this here. 2.81, 2.81, 2.8235, 2.85, 2.5. So let me just quickly go over there. No, this is the 0.75. So with the prices in mind, right, we are going to just do a price times quantity to come out with the revenue. And here's the difficult part, right? The difficult part that you're going to be having is assuming how much you expect the quantity to change over time, right? And that's a difficult thing that we are going to be addressing. So first of all, I'm going to address it with a quick and dirty item, right? That is going to be a growth rate that we are be expecting over the past period, right? And assume that it's constant, right? So if we imagine that your quantity is not affected by prices, right? Or imagine that the quantity that you're going to be selling, right? It's more or less constant, given that you are basically in a stable environment, right? That you have not significant influence, right? And you are not a significant player, right, in the market, right? Your market share is going to remain more or less the same, right? You can maybe assume, well, I'm going to have something similar of quantity produced as the prior period, right? We're going to obviously realize that's not the case for Volcan, right? And let me see if we are going to have enough time to come out with the other estimation. We are going to first start with a nice assumption of what's going to be occurring, right, in revenue production, right, over time in the coming years as a whole, right? So if we go for a minute, let me just quickly drill here, move here from an annual perspective, right? Let me just first start with an annual perspective because it's better to think about it that way. From an annual perspective, what I just did, right, is calculate how many tons were produced in 2016, I think, right? And we can realize that it's more or less constant, right? It has a 10% change, less than 10% change, right, in the past years, right? If we want to think about it. And similarly, in the case of lead, we have a drop in 2017 and then an increase in 2018 and 2019, right? So if we want to think about this in terms of growth rate, right, just for the sake of having this very more clear, right, there's a slight drop over there, right, but then there's a recovery if we are going to think about it, right? You want to think about it. So in general, right, what we can basically assume, right, is that, okay, this quantity, this estimate that we're going to be having between these past years, right, it's going to be a most likely reflection of what's going to happen in 2020 and 2021. So I'm going to first start doing this on an annual perspective, right, the quantity side, and then shift into a quarterly perspective, right? Why I prefer to do that, right? Because from a quantity side, it's a lot more difficult to try to estimate how much is going to be produced each year, right? And this applies to different type of companies, right? In different types of industries, right? We're going to drill and allow us to stay on the next class very quickly when we go into the relationship that I mentioned, the drivers that are going to help us come up with estimation, right? For those who are economists, you're probably thinking obviously about regression analysis, correlation analysis for start with from a statistic standpoint, right? And then a regression analysis to come up with how much are going to be the quality affected by the prices, right? And logically, you need to do all the typical tests, and we're going to see if we can have enough access to do that as I expect. So, but coming back here, right? Once again, I'm trying to do this only from a perspective of the trying to estimate the total quantity, right? How much should grow the total quantity, and then calculate the quantity for each one of the different periods, right? So what we're going to be doing here, right, is we're going to make an assumption about the production that it's more or less similar, right, to the one that we had before, right? And I'm going to that assumption at the beginning, right? Then what I'm going to do afterwards is I'm going to question that assumption, right? And that assumption is going to be questioned because there's a change in prices, right? And there's a change in the current environment compared to what we had in 2019. So give me some leeway, at least for the following minutes, to first make an assumption about what we believe it's going to be the production in the coming year, right? So I'm going to make an assumption that is going to be similar to the last two. Why am I doing the last two? Because the growth rate, right, that we are observing in the particular in zinc and lead, right, it's basically a change, right, from 2017 as an outlier, right, and it's more stable in these particular two years, right, 2018, 2019. You can actually go and question, hey, you should go and take 3 to 4 years, right, as an estimate. Yes, this is an assumption that we're making at the beginning, and once again, and we're going to question that assumption later on, right? I'm going to assume that that this structure continues the same, right? Only for the sake of simplicity and for completing the calculation that we have of revenues, right? I'm going to assume the same for lead, right? But copper is a different issue, right? Copper, if you realize, had significant volatility on its quantity produced, right? It has a 13% drop, a 10% uh, increase, right? It actually has a significant volatility in general, right? You can argue you should use 3 past years to come up with a better estimate, or the last year, right? All of those things should be assumptions that are highlighted, right, in the assumption tab. We're going to make an assumption tab. Clapper here, let me just quickly put that we are using assumption 2 months average, just for my sake. And then I'm going to consolidate saying all this in another tab, which is going to be helpful. And I'm going to be using the last period as an estimate, right? Once again, I'm making an assumption. I'm going to question that later when we discuss this in a bit. Similarly for the last two elements, right? And those are going to be my assumptions. Okay, and just to finalize, since I'm taking a lot more time than expected, I'm going to distribute these two quantities, right, in the different quarters using the last year, right, for seasonality in production, right? And we're going to be using the last year seasonality in production as a way to try to estimate these quantities, right? So it's just coming up with the total number that we have over here, right, for 2020. I'm going to have to hard code the column, right, times the month we have over here for March, and divided by this number that we have over here, putting dollar value in the column, right? I don't want the column to be changing, right? That's going to be helping me calculate 176, 176. Calculate, as I was saying, the quarterly production in each one of the different quarters, right? As we have. And then same thing for other tab, but only that this changes, right? This is going to be not going to be U20, it has to be Q, right? This has to be Q once again. And we calculate this. Okay. With that in mind, right, we have already the prices and the quantities, right? And we can quickly calculate, obviously, the price times quantity to come out with the revenue, right? This, once again, repeat, I'm calculating this as a whole, right? To come up with the estimation. Let me just quickly, in 1,000, that's why it needs to be divided by 1,000 as a whole, that is applicable to different type of products and companies, right? We're going to question this for the mining facility, probably next class given. So very quickly, let me just, I'm multiplying the price times quantity, but I need to be aware of the units that we are using, right? So it has to be divided by 1,000, come up with the correct values, right? It helps to have the price in the same unit. In this particular case, a little bit different, right? We need to multiply. Remember, 1 bar has 1,000 ounces, right? So we need to multiply the number of bars, right, times the price per ounce, right, that we have, and 1,000, if I recall correctly. Let me just quickly, yes, no, divided by 1,000. The opposite. I'm making a mistake. I'm making a mistake. What is it? Bars. Is it bars times ounce? Yes, it's bars ounce. Yes, that's simple. Bars times ounce. That's it. So every one of them has to be by 1,000. That's it. Okay, with that in mind, we can calculate once again the forecast for the next 2 years that we have. And here, need to make it work. I need to copy this to the right. Have my structure that we are familiar with, and we can copy this to the left, right? If we increase the numbers, AB, and that gives us a forecast of revenues for the following year as which we'll expect, right? So please review what I just did. So very quickly, just to show it, let me put it here. We're assuming that it's going to decrease, right? Once again, we're decreasing, but we're not decreasing the 10% or 10.9 that was said by Macro Consul, the macroeconomic multiannual, and we are not recovering the 15%, right? We are more reasonable in this assumption. And everything is coming based on prices that were assumed, right, in this particular scenario, right? I decided to use quarterly prices, right, because we had that information available. But realized for 2021, let me just 1 minute for the immobilized view to just make it more clear. For 2021, I assume the same price, right? Because I only had that. You can also use the data from an annual perspective. You have the annual price and assume it's the same price all along, right? Or have some evolution in the price, but that's more difficult in reality to make that assumption, right? So once again, I'm going to upload this. This is an assumption, right? And that we are making right now that we are going to question next class, right? As I promised, I'm sorry I wasn't capable of doing last week. Unfortunately, I was out of business. If you want to think about it in terms of how sick we were. Um, I'm gonna upload a case to consider what's gonna be not only revenue forecasting but also cost forecasting, right? And we are gonna analyze that together next class along with this estimation, right? So I'm gonna also send an email when I upload that, most likely tomorrow, right? To everybody. So once again, for those of you who arrived late, just in case, yeah, we already have more people. I please I usually do announcements, right? In this case, the new Aula Virtual uses an email, which is the not reply Blackboard. Please check it out, your spam folder, to be sure that that's not where announcements are going, or actually make the configuration to that particular email address is a secure email address that you want to have in your normal inbox. But in addition to that, as I mentioned, there are 2 students, right, uh, whose emails bounce back. What I mean is, in addition to the announcement, I like to email you information to be sure that you receive that. And these students were Maria Fe Castañeda and Miss Milagros Perez. So please, Maria Fe Milagros, shoot me an email um, to confirm your email address, because those email addresses that I have that are the ones that are on portal, yes, I didn't took it from any other place, bounce back. I don't know exactly why. This is my email address, just in case anybody suggests anything else. Um, without further ado, let's wrap up here. Thank you, Renato, for offering us REA. And I'm going to go through the whole process and register you in the following hours. If there's any question, any doubt, any issue. Okay, so once again, guys, I this starts a little bit easier, just in case for those of you who are more familiar with modeling, right? We started with the typical thing with revenues, but let's start complicating it further and further, which is the case, right? And hopefully I put some highlight onto, thank you, Milagros. I'm going to put some highlight on some issues that you are aware, but happy to have a lot more engagement, right? It actually helps me, it actually benefits all the class if you have some trouble modeling some particular revenue in a particular company. For instance, one of the more difficult ones that I have to deal with was revenues from insurance company, right? The issue with primes are significantly complicated, right? Because you also have to deduct all the costs of reinsurance, right? I'm going to touch base on that next class. Let me just draw them down, right? I think that's going to be helpful. But it actually also helps the class as a whole if you have some problems modeling something in your internship. I'm going to address those other issues too. As I said, I need feedback from you guys because fortunately I cannot read your faces, right? Which is thing we normally professors do when we are in front of the class, right? To come up with solutions. Without further ado, have a great sorry, just Tuesday. Have a great week and see you next Tuesday.